Good morning, everyone. As been shared, I work with Introsight, which is a global marketing firm, and with the Milken Institute covering the Middle East. So I also had the privilege and benefit of working with two of our panelists today. So I don't know if that means I can grill them extra hard, or if I should be more worried about losing my job. But so first, I'm delighted to have Ibrahim Ajami here. He is responsible for leading Mubadala's venture capital strategy, which is broad. Previously, he's held a number of different roles at Mubadala and was the chief strategy officer for Global Foundries, the world's second largest semiconductor foundry company. Ibrahim can hopefully give us all a truly global perspective on the venture capital market from his seat, and give us a little color as to why Europe is so interesting and why Europe and the UK are positioned for success. Do you hear a ringing in your nose? Yeah.
I hear it.
Yeah, okay, sure, it's just me. Continued for growth and success right now. So Mubadala. So for those of you who don't know, it's the state-owned sovereign wealth fund, one of the largest sovereign wealth funds in the world, $225 billion. Ibrahim specifically oversees venture. So what is venture for Mubadala? It's $15 billion allocation to the largest tech growth fund in the world, SoftBank's Vision Fund. That's a diversified and well-established fund-to-funds portfolio, investing in emerging and established leading venture funds globally. It's what Ibrahim built in Silicon Valley, really a business that he built from scratch, and then I guess now most recently Europe, and so kind of replicating or learning from what he's built in Silicon Valley, looking to launch the European Ventures Fund, which is a 400 million ventures-backed fund by SoftBank. So with setting the stage with that information, I guess, Ibrahim, why would one of the largest sovereign wealth funds in the world, an entity owned by Abu Dhabi that can write checks in the size of $15 billion to one group, why would they invest in building their own venture team over just accessing venture via other well-established fund managers? What is Abu Dhabi looking to build and gain through your venture platform?
Yeah. Thank you, Louise. So first of all, I just want to make one thing very clear. I do not oversee $225 billion investment firm in technology ventures. It is a global investment firm. It's 100% owned by the government of Abu Dhabi, and we are, think of us as sort of a global financial investor and a global operator of businesses. We've been investing in technology for about 10 years, mostly in very large semiconductor manufacturing and advanced technologies. And about 3 years ago, the premise was we should really start getting much closer to founders and really start partnering with them through the entrepreneurial journey. And we realized that we can't do that sitting in Abu Dhabi. We really have to think very differently about how we can partner with founders a lot closer and be partners with them through that journey. So we had set up to launch these venture vehicles initially in Silicon Valley, and we did that. We built the group in San Francisco. And there was a few criteria after spending a lot of time in Silicon Valley and meeting a lot of funds and a lot of founders about what will it take for us to play an impactful role in the world of ventures. So first of all, we need a team on the ground. You have to set up the office. You need a team that understands the entrepreneurial journey, that respects it, that embraces it, people that are able to invest. And that's one part of it. We also said we should also be investing in other funds. That's a key part of our strategy, where we would invest in smaller seed and early stage funds, because that's not a part of the strategy that Mubadala potentially can deploy. So our funds business then became such an important part of our strategy in building these relationships, giving us access and insight, and ultimately becoming better underwriters of these investments. And 2 years into it, as we've built the firm and we started making investments and started partnering with funds, We had also made a very large commitment to the SoftBank Vision Fund, and I'll talk about how all that fits in the story. We started increasingly meeting founders and funds and companies coming out of Europe. And we were quite intrigued. Sitting in Abu Dhabi, our initial hypothesis is if you want to invest in outstanding technology companies and exceptional technology founders, you can only be in Silicon Valley. But in reality, we started seeing significant amount of traction happening coming out of Europe. We started meeting some very interesting funds. Lakestar, which is one of the funds that we invested in, you'll meet Dharmash today, and started to understand really some of the very interesting innovation that's coming out of Europe. So then we said we should take what we're doing in Silicon Valley and we should replicate it in Europe. And London is the right place to set that up. So we've just launched our Europe platform. We launched that 6 months ago. So we now have a fund that we invest in early stage companies. And we also have a fund-to-funds platform that we invest in other funds. So we're really replicating this model. We're also going to replicate this model in the Middle East. Why are we doing this at a global level? Because we have a very strong thesis, which I'm sure many of you here have been thinking about for a long time. It's not like we're the most creative or smartest people in the world. That venture has to be very local. If you really want to partner with founders at the local level, it has to be a local business. There has to be a very intimate and deep relationship partnering with the co-investors, with the founders. But at the same time, the internet and software is enabling scale at unprecedented levels, and you need the global access and the global network to scale. And we at Mubadala have that global reach that not many other investors can do.
Can I just interject there for a minute? So when you think about it, you're launching in all of these new markets, and there are very successful, well-established funds in these markets. How does Mubadala enter and position itself for success? And what are you're meeting all these great founders, but how are you better positioned to help these founders? What is specific to Mubadala's network and strategy that you think really resonates when you enter a new market?
Yeah.
How easy is that?
No, it wasn't easy in Silicon Valley, right? Initially in Silicon Valley, there was a lot of resistance. Sovereign wealth funds. The two biggest, just to answer that specific point, because that's a really interesting one that I personally experienced quite painfully. Listen, Silicon Valley's initial resistance was sovereign wealth funds like yourself. First of all, they invest in tech in good times, and then when there's challenging times, we sort of retreat. And number two is you don't carry the journey of the entrepreneur on your shoulders and support that founder the way we do over 5, 6, 7 years, even 10 years in some cases or longer. And we set up for that precise reason. And it just takes a lot of time to make these promises and then slowly deliver on these promises and work very hard to prove that we're here long term, we're establishing, we're here to stay, and at the same time we are going to support you as co-investors to support these companies. What is it that we do that's different from all the others? I would say number one is we are local, just like a lot of the other a lot of our other venture partners, but at the same time we have global access like very few other firms have. So we have a significant network around the world. Mubadala owns over 60 companies in 12 different sectors in over 50 countries. We do everything we can to give our entrepreneurs access to these companies. These are banks, real estate firms, hospitals, companies in semiconductors, aluminum, energy, mining, manufacturing, aerospace, satellites, data centers.
But are you really giving founders access to these companies?
Yeah, we have a whole team that actually works on opening these doors. And the most exciting part of it is the third one, which is our ability to invest with the founders at multiple stages, what we call the life cycle investors. Mm-hmm. Once we identify a winning company or a very high growth founder, then our ability to invest over a long period of time in significant capital to support that founder becomes one of our very unique differentiators. So these are kind of the three dimensions I would say that we are really anchoring and positioning ourselves as important venture investors. What's more important than everything I just said is this is a like you all know, this is a business where we have to be out there and we have to hustle every single day. And that, for the mindset of a sovereign wealth fund, is actually quite foreign in many different ways. It's going out. In the U.S., we've invested in companies in Salt Lake City, in Austin, even in Kansas City. You'd be surprised how many Silicon Valley investors don't travel to these cities. In Europe, we would have to go out and we'd have to travel to Barcelona and Berlin and Paris, all lovely cities, but we'd have to really go out there. So it's not just us as a sovereign wealth fund sitting in our ivory towers, but it's going out there and operating and committing and engaging with the entrepreneurial system just as hard as any other small seed fund does. That, I believe, is the mindset that we're trying to tackle in this business.
And why Europe right now? Was Europe always part of the strategy? Is it opportunistic in any way from a timing perspective?
I mean, you know, the thesis was that we would ultimately create a global network. We didn't anticipate that we would move to Europe as quick as we did. 2 years after launching Silicon Valley, we actually moved a lot quicker. And really, that was driven by a strategy where Mubadala and our partners at SoftBank said, there's something very exciting happening in Europe. 2018 was quite an instrumental year of Europe in terms of IPOs and in terms of technology companies scaling, immense amount of technical talent. You know, you could say that what's happening here today, or what's been happening over the past couple of years, is similar to what happened in Silicon Valley 10 years ago. So we're sort of we have a very strong view that this is the beginning, or at least we are investing and deploying capital on the premise that the next 10 years are going to be very, very important in Europe for technology.
And I know you've moved to London or taken a house in London, maybe timing-wise, it's in the summer. I think that's perfect. Better than being in Abu Dhabi, I agree, than in summer. But why London? Did you look at other cities? Would you have considered anywhere else, or was it clear to you from the get-go that it was going to be London?
Yeah, I mean, the response, honestly, Louise, it's sort of why Silicon Valley? I mean, London and the UK is the heart of technology in Europe. This is the most active place. This is where the center of gravity is. It doesn't mean that there's no other technology places in the US or there's no other technology places in Europe, but this is really where a significant amount of activity, and we want to be at the heart of that activity. And we will go out there and build partnerships. We will, over the next 2 to 3 years, you will see us partner and invest in funds that are based in different parts in Europe. And we will take positions and take risks on emerging funds, first-time managers. The greatest story that we like to say in 2009, Peter Thiel came to Abu Dhabi and presented Founders Fund, and Mubadala passed on Founders Fund 1, it's Mubadala of 2009, 2010 is different from Mubadala of 2019. So we will take positions in first-time managers, in early managers, in emerging funds where we believe they have a unique point of view, a unique thesis, and could potentially be one day as big and as important and as impactful in the world of tech as Founders Fund has become in the US. So that's the long-term mindset, and that's the partnership mindset that we're trying to approach in the world of ventures.
So if that was Mubadala 2009, Mubadala 2019, what's Mubadala in 29? What are we looking at in 10 years?
Yes. So today, if you... how many people here have not heard of Mubadala before today? Have not? Wow. Yeah, so my hope is in the next year or two that when I say this again, a lot of people here have heard of Mubadala, just given we're going to be quite active. But if you look at Mubadala today, and you can go online and you can read all our assets, our largest 5 companies in the Mubadala portfolio today are energy and industrial companies. Our hope is when you fast forward 10 years from now, and just in your mind, just look at the scale of numbers, right? We manage 220 billion of assets under management. If you fast forward to 10 years, I don't know, 300, 400, 500 billion of assets under management. The largest 5 companies, our hope will be technology companies. So we want to have 2 or 3 companies in that portfolio that are worth 30, 40, 50 billion dollar companies. So why should Europe why should Europe not be the place where some of these companies come out of? That's the approach that Mubadala is taking over the next decade.
So you're going to build a best-in-class investment team in different parts of the world.
Yes.
And so now we're in Europe, and then what's next? Will you move to Asia? Will you?
Yeah, I think so. So we've just also launched in Abu Dhabi in the Middle East, and obviously Abu Dhabi is much smaller. It's a nascent entrepreneurial ecosystem. Even though there's a lot of activity in the Middle East, some recent acquisitions that I'm sure many of you heard, with Uber buying a company called Careem, with Amazon buying a company called Souk. Actually, a lot of that is happening in the UAE. So we're also going to launch the same strategy in the Middle East to look at accelerating the startup ecosystem that's happening in the Middle East. And then at some point, sort of look at where in Asia we want to play. We are investors in Asia today, but in a much larger scale. But thinking through an early stage investment strategy in China and Southeast Asia is going to take some more time.
And what about SoftBank? I'm sure everyone in this room, hopefully more people have heard about SoftBank than Mubadala, but why the partnership? What are you guys getting out of it? What is SoftBank getting out of it? And how does that fit into the broader venture strategy?
Well, Louise is referring to, I'm sure many of you, SoftBank Vision Fund. We are large investors in the SoftBank Vision Fund. Again, for us, it's the law of numbers. We needed to deploy significant capital. We believe that what SoftBank is doing is actually quite innovative and unique in the world of technology. So we committed a very large investment into SoftBank Vision Fund 1. And to us, as we think about how the SoftBank Vision Fund plays a role in supporting some of our founders, so we would invest in early stage funds. These funds would invest earlier on in the entrepreneurial cycle. Lakestar is an example. We're an LP in Lakestar. They're very important partners for us. Potentially Mubadala would follow on, work with some of these founders for 2, 3, 4 years, and get these founders ready for a much larger investment from the SoftBank Vision Fund, or even from other pools of capital in Mubadala. So that sort of story of being a life cycle investor and tapping into these different pools of capital. But above and beyond this sort of story that I've just created, the vision for SoftBank is SoftBank Vision Fund, and why we really backed it is, listen, there's going to be trillion-dollar companies created over the next 10 years that are truly underpinned by artificial intelligence and software. There will be. I'll give you just the data. In 2005, the total market cap of Chinese technology companies was $6 billion. The total market cap of Chinese technology companies today is $1 trillion. So over the next 10 years, there's going to be a significant amount of value creation. And that's a big thesis for the SoftBank Vision Fund.
Okay, so I guess in summary, so if you're looking for money and you are a company at the startup level, you're a fund, you're a huge company, you're someone good for the Vision Fund, Ibrahim can help with all of those. So in the question and answer period after, and then in the other room, you can, if anyone's looking for capital, it sounds like he's the place to go, right?
Yes, or my co-panelists that are coming up.
Okay, yeah, and now we'd like to call up some of your co-investors and some of our co-panelists to join the stage. So you guys feel free to come on up. Thank you.
It's like in a casting show.
Okay, so I'll just... Oh, yes, okay. My chair.
The other way.
Oops, other way, okay.
Closer to me.
Closer to me. If I have to. Okay, so I guess I'll give a brief introduction first of the other panelists. So Christian Angermayer, Apeiron Investment Group. Christian is an entrepreneur and investor, serial entrepreneur. He started many successful companies and now runs and manages his own family office. He also works closely with President Kagame, with Angela Merkel. He has a number of formal and informal advisory positions with with people in very important places across Europe. So Christian hopefully can add to the conversation as an investor and also as a German, give us some views on the German market and on Berlin and on the development of that ecosystem. Julia Hawkins is a partner at Local Globe, and I'm sorry, it seems you're not on the screen. I don't know how that happened. Julia is one of Europe's leading early stage investors, focusing on pre-seed and seed stage. I think over the last 15 years, you've made more than 200 in investments, making you the largest seed fund across Europe and the UK, I believe. And then last but not least, Dharmash Mistry, a partner at Lakestar, who Ibrahim has now referenced a few times. So a former CEO turned to the dark side as a VC. Dharmash is a partner at Lakestar, focusing on early and growth stage investments on both sides of the Atlantic, but in AI, machine learning, fintech, consumer, also a board member of the BBC and the British Business Bank. So hopefully can also add some perspective on the role of government kind of in the venture market and the development of the ecosystem here. So I guess I'll kick off the first question to you, Dharmash. So can we talk about valuations? So the seemingly low valuations in Europe compared to the US, and as we see the development and the number of unicorns in Europe increasing dramatically, valuations might be still 18 times in Europe versus 40, 50 times in the US. So can you talk to us a little bit about that, and is there a potential for arbitrage there and the opportunity we see in that market?
Sure. I mean, I think there's probably a macro narrative of are valuations too high generally, which is one we put on the bench for now, but we can happily debate. But in terms of your question, in terms of US versus Europe, I think this is a golden time for Europe in terms of that question opportunity. Three things. When you look at the 70 plus unicorns that have come through Europe, and probably more coming through, it's much harder to be a unicorn in Europe than in the US. So analysis that we've done, roughly you need to have 3 times the revenue in Europe versus the US to get to that kind of valuation. So i.e. the multiples are lower. Secondly, because of history, I think Europe has grown to be much more capital efficient. And therefore, I think we looked at some stats at Lakestar where I think it was looking at the unicorns in the US, less than 3% had raised less than $100 million to get to unicorn status. In Europe, it was something like 35 or 40% had raised less than $100 million to get there. So capital efficiency. And then thirdly, I think many of the crowd know that there is a slight delta in ticket size and valuation at Series A, Series B, Series C versus the US. So when you look at the three things together, you start to say, look, there probably is an arbitrage opportunity, and there's a window of time as the European ecosystem develops, and some of the points that Ibrahim had made in terms of Europe being interesting at this moment in time.
And what about the exit markets in Europe, like the ability to exit here? Can you talk to me a little bit more about that too?
So I think one of the things which I think we all probably don't appreciate, but ecosystems take 10, 15, 20 years to develop. They don't happen overnight. And the ecosystem gets powered not just by great companies coming through, but the exits, which A, increase ambition and vision. B, the most important thing is you're seeing founders and teams spinning out to do the next thing, and then coming in. So we're seeing second, third time founders and teams who've learned how to scale companies. It's a completely different kind of environment from 5 or 10 years ago. And so, 2018 was a big year with the likes of Spotify, Farfetch, Adyen, and a number of others come through. So now Europe can point to, 5 billion plus, 10 billion plus exits, which we hadn't seen before. And so now that scale suggests that actually there is a success wheel and the ambition starts to build and ecosystem builds to the next stage.
So on that ecosystem, so London, as Ibrahim said, it was a clear choice for him. So talk to us about London. I think 85% of your investments are made in London or nearby. Why is London the tech city of the future? Are you convinced?
Yeah, I mean, Local Globe is definitely bullish on the UK opportunity at large. 85% of our capital is allocated to companies that are based here or within a very short train journey. I think in terms of unicorns being created, as Dharmash said, 34% have in Europe have come from the UK. And I think in terms of ecosystems within the UK that are producing unicorns. Even cities like Leeds or Edinburgh have had 2 unicorns. That puts them on par with other cities like Barcelona. So I guess the way that we look at it is like it's just as easy to get on a train to Leeds as it is or it makes as much sense from a time perspective to get on a train to Leeds as it would do to travel to other ecosystems.
Okay. And from a political perspective, Christian, does Brexit have any impact on venture and tech investing here? So I guess kind of from the political perspective and then from the cultural perspective, do you see different types of companies coming out of Germany or coming out of the Nordics or coming out of the UK? How do you kind of put that political and cultural overlay as you're kind of comparing the different ecosystems across Europe?
Okay, where to start? So although I invest 95% in Europe, so I'm bullish on Europe. So, but a little bit the counter thesis, I do see the arbitrage, whatever. But I also think we shouldn't underestimate that, and this is, I think, true a little bit more for Germany, but also for Britain compared to the US. Yeah, that we have some cultural DNA things holding us back being as successful as US companies. So one thing I've seen is that founders sell pretty early. So in Germany, and I think the same in Britain, is like if people make 50 million or can make a 50 million exit, then they think they made it. Meaning, and it is great, like it's really great, but like they sell early, and then sometimes they sell to American companies who then really make more out of that technology. So I remember when I did my first company when I was 20, and we IPO'd for $1 billion, but I had a smaller stake in it. But like my mother was like, so now you sell everything and you're done for life and you can enjoy your life. And I was like, no, I want to go on. And like, so, but the German and I think a little bit the European mindset is rather sort of stay under the radar, stay small. So and the second point, which fills into that, is that ambition is not 100% seen as a good thing in Europe, at least not in Germany, and I think a little bit better in Britain, but America is way better, that they really allow people to think ambitious. Like here, people almost, I mean, it's getting better, but if you meet founders, then you need to sort of push them and say, look, you can build maybe a multi-billion-dollar company, not just some 100 million, and really dare to do it. Yeah. So as optimistic I am, and I agree, ecosystems do take time, and I think also that sort of society is a little bit catching up with it. I also think there are still, DNA things, societal things holding the ecosystem back, at least relatively seen compared to the US. And the second point is, unfortunately, and I really love politics, and I'm pretty involved in it, especially in Germany, is that Europe is really not doing well on setting the sort of, at least for like the economic side, setting the path for the next 10, 20 years. I think the two things, I think the Euro crisis, I always try to describe it, has been like a severe cancer, which has been treated, but like it's completely exhausted the political system of Europe. Yeah, and there is little really strength and power for setting now the course right for the next 10, 20 years. And I think this will, and it's not, meaning it's visible at the moment that UK is a complete mess. Yeah, but I think it will be even worse because even if you overcome Brexit, and one way or the other, that will be, let's call it solved, whatever solving means, but then I think you will fall into the same trap sort of Germany is in, that your political system and your political class will be completely destroyed, so that people cannot work with each other anymore, because, meaning, it's really like, think of a chemotherapy, somehow you will make it, but you're gonna be like a shadow of your former self, and I think this will take 10 years of recovery, and this will be lost 10 years, where you actually would need the politician to focus on how is the world looking in 30 years, and how would we need to set...
But do you need to look at Europe as a single hub? Is this a one unified story across Europe?
I think it's in different ways happening in all the countries. So every country has its own story, but it has the same root, which is sort of a deep exhaustment of the political elite. And then you have all the other stuff filling in, like the populist stuff and the distrust in elites anyway, and blah, blah. So I think with all the positive, and again, I invest a lot in Europe, but there is also a lot of challenges. And I think, unfortunately, where populist movements are going, they make it even harder for very successful people. So I think, personally, the next 10, 20 years in Europe will be not good for successful people. Meaning not good, but will sort of the view society has on success, unfortunately, in that sort of kind of environment, is actually rather getting worse than better. Which is bad for...
Okay, well, thank you for that positive outlook. Yeah.
Let me I want to make a comment from how we... I don't know the implications, actually. You're much more knowledgeable, successful, proficient as European investors than we are. We just started. But we're still trying to understand how entrepreneurs sort of pitch their story here in Europe. Just coming from investors that have invested in Silicon Valley or we've invested in China, we're still trying to really find the right way to evaluate how founders tell their story. Obviously, Silicon Valley, they tend to be a lot more forward-leaning in terms of their promises and their visions, and obviously always at the edge of reality. We've observed also recently, in the past year, I've been to China twice. Even the Chinese entrepreneurs tend to be a lot more. Now they're technically very strong, but also they're thinking about management systems and cultures. But they also have sort of a global mindset. Yet I don't want to generalize, but our interaction sort of so far in Europe, where you see them just a lot more reserved and hesitant to sort of say this can become, $100 billion company. In Silicon Valley, every founder tells you, what I'm doing is going to become a $100 billion company.
We see many ambitious founders, and I think the number one filter that we apply to investment decisions is, can this become a $1 billion company? And I think it's up to investors to have different ways of evaluating founders and really try to look beyond what is really just a pitch and to see what is the potential of the business, where is this heading, and so I think that we have to become proficient at working with founders to help them, and if that is one of the core criteria in terms of helping them with the vision or telling that story.
Mm-hmm. So I wonder if we look at the last 10 years and the U.S. being a leader and maybe the American psychology and DNA being perfect for some of the social media companies and some of these consumer-facing companies. If we look at where are we going in the next 10 years with deep tech, AI, robotics, Dharmash, what do you think, what does that mean for the UK and Europe? Does that actually put us in a better place to compete with the U.S.?
Yeah, I think... hopefully, yes, but it's going to be competitive. So I think if you're an investor in venture in our kind of space, probably 10 years ago it was media on demand, then e-commerce, marketplaces, software as a service, fintech, and you can plot the trend. The next wave is highly likely to be more deep tech orientated, where probably AI and machine learning, you can take every piece of a value chain from healthcare to education to mobility and transport, break down the decisions made, and at some point, maybe computers or robots will start to make some of those decisions. If that happens, the same will happen in the first wave, where the value accrues to the data and the software layer. So these are going to be very disruptive. So 2 or 3 things. One, I think Europe is really well placed in terms of talent. So I think we have 5 or 6 of the top 10 universities in computer science, 12 of the top 20 or 30. It's Oxford, it's Imperial, it's Cambridge, it's UCL, where the DeepMind team came from. It's also, ETH in Switzerland, KIT in Sweden, etc. So we have super talent here. I think the second thing, which is kind of feeding off Christian's comment, I think whilst there's a political mess, and I agree with the macro comments, I think there might be a huge advantage in the next wave, because the conversations that I have with government, we have with government, kind of talk about, look, if in this next wave AI and ML are going to play a role, and it's in these verticals that are the levers to control your country, transport 15% of GDP, healthcare or education, etc. If you allow the same thing to happen as the last wave, where the FANGs took monopoly positions in multiple markets, then ultimately your country is going to be controlled by the Americans or the Chinese, and you have no levers to pull. And therefore, this next wave, I think governments are understanding, for good or for bad, yes, it's about taxing and regulating FANGs, but I think the biggest change will be about competitive markets. And I think this next wave will be about competitive markets with local talent and local winners playing a role, and therefore working with governments as part of this next wave. And so I think there's a macro shift. Whilst there is a mess, I think which will advantage the smart European players, because now we're seeing billion-dollar companies in single countries, not just pan-European or global, because even each of these verticals are trillions of dollars.
Yeah.
Right.
And therefore, to answer your question, talent on the one side, I think working with governments who understand that they cannot be subsumed as, effectively a subset of the US and the Chinese are the next wave.
Yeah.
So when we think about role of government, Ibrahim, maybe Abu Dhabi on the other extreme, what would your view be on that? Yes, you don't want foreign investors owning all of your AI, even all of your data, of your healthcare, your transport. So how do you avoid that? Is it inevitable in some of the smaller ecosystems you're not going to be able to tackle all of these industries? So how do you think about that and maintaining control over some of these sectors?
Yeah, listen, we'd like to, just exactly what Dharmash said, the role of government is essential. So we have taken a view that we want to position Abu Dhabi as the leading tech hub in the Middle East. We know it's going to take us 20 years, if not longer, and we're willing to back it with the capital, the resource, the investment in people, the investment in talent. And the best way, what we've done in Abu Dhabi, the best way to sort of really bring the government, the regulators, the policymakers, everything from regulation to immigration to security to communication, is to really start pulling them closer to founders and startups, even at the early stage. What are the challenges you as a startup are facing? What are the things that you need as a startup? I'm a healthcare startup. All of a sudden, I'm the government of Abu Dhabi. I'm the Ministry of Health. I put out a regulation that says, all healthcare data needs to be stored in the UAE. Okay, what does that mean? Do we have enough data centers? What are the implications on the very large data service providers? What are the technologies, the requisite technologies, the applications, security implications of having this data? So the ability to bring real entrepreneurs and real startups and having them interact closely with the regulators is something we are actively doing in Abu Dhabi today. We can do it. We're a small country. And we have a very strong aligned vision and intent to really transform our society to one that is driven by technology. Without that, over the next 10, 20, 30 years, governments that don't really do that proactively, I think will face significant challenges in the future. And just like Dharmash said, we'll have Facebook and Twitter and Google and probably some of the Chinese applications. I mean, Twitter has become just as important for the government of the United Arab Emirates, like a utility company. Right? You can actually measure the state of conversations of a country. 10 years ago, the leadership around the world didn't look at Twitter as such an essential foundational service to the state and health of a country. So yes, these are all things. Data becomes ultimately the most significant resource that any government should pursue.
So Christian, when we think about that, China versus the U.S., or no, maybe not versus China and the U.S., both and their presence in the venture and the tech market, how does Europe fit in there? Can Europe benefit from anything that's going on between China and the U.S.? Does Europe have to choose in some way, especially as it relates to who they're partnering with and with these different tech companies, who they're taking money from? Do you have a perspective on that?
Well, politically, we're not able to have a common foreign policy, so we will not be able to choose anyway. But I would say for tech companies, you can phrase it positively, which I would tend to, is like Europe sort of is neutral. Yeah, so you can use it to your advantage. Yeah, I do think personally, and it's a very incompliant view, is that Donald Trump is doing more things right than wrong. So I actually think what he's doing, like him or not, is very good for America for the next 10, 20 years. So actually that whole trade war thing is rather making the the economic position of America for the next 10, 20 years stronger. Yeah, so indirectly it will also profit American tech companies. So net, I would say it's sort of negative for Europe because it's positive in terms of market strength or competitiveness for American companies, but we have to play the hands we have. Yeah, so we have to play the neutral partner, and that can be a good position as well.
Julia, you have talked extensively about healthcare being a really interesting investment opportunity, and you actually believe that the UK is positioned to take advantage of. Some people would see the NHS as a blessing, as a curse, the access to the NHS and efficiency or inefficiency of NHS. How are we positioned in the UK to become a leader in the healthcare space, and why are you excited?
Yeah, I mean, first and foremost, it's obviously $1 trillion market opportunity, and I think at Local Globe we have currently made 9 investments in health so far. They've been from consumer wellness through to AI diagnostics. We're looking significantly at computational biology. Our office is just across the road from the CRIC, which is the largest bioinformatics center in Europe. We are developing our relationships extensively with Oxford and Cambridge. I think, to your point, Dharmash, in terms of intellectual capital, as well as having then a single payer access market with the NHS. I think now the NHS is actually doing a lot to become more open and in terms of really welcoming innovation. And I think over the next 10 years, given where we are in the life cycle of healthcare investment, is still very, very early on. And I think over the next 10 years, it has the potential to become the next center of gravity for investments in the UK. The UK has actually done obviously phenomenally well in fintech, but really, we're very bullish on the opportunity in health.
Christian, you have a number of health and biotech investments. What would your view be on the UK in that space versus the US versus the rest of Europe? And then I guess within that, what is particularly interesting to you?
Well, the good thing with biotech, I think, is you either have a good compound or not. Yeah, so that's sort of a little bit more. I agree in general. That's one of my very positive points on Europe. That I think what Dharmash already said, that deep tech is meaning the American DNA, and I really believe a lot in these sort of underlying DNA characteristics of a society and of culture. And the American culture was so well, as you said, suited for consumer internet models and for social media. That's the typical American is selling himself to hell and is perfect for social media business models. While I think Europeans are way more, as you said, grounded. Like we really want to know that it works before we talk about it and stuff like that, but we are very good in like deep tech, robotics. Like Germany has a very big robotics hub. I have some robotics investments, AI, all that stuff. And the same is true for biotech. I think so the whole deep tech wave is sort of leveling out the playing field to America first, and then in biotech especially, as I said, you either have a compound or not. The issue is in Europe still that the biotech venture market is very underdeveloped, so there is really, meaning it's maybe more extreme than in any other sector, that once you need huge amounts of money as a biotech company, you need to go outside of Europe. So fundraising is challenging, but again, if you have a good compound, people will give you money. Yeah, and actually, my all favorite portfolio company is in the UK. For all of you who have heard about it, we're working on making psychedelics legal again, especially magic mushrooms, for the medical use as a treatment for depression and other mental illnesses. And this is a UK company, so it works. In any way, it works.
The company or magic mushrooms? I
am a big believer in the whole psychedelics field.
So, Dharmash, how do we continue to see growth in Europe? What your involvement with the bank? I mean, what what do you guys need to keep doing, or what does the government need to keep doing, from tax schemes? I mean, you see all these different European countries offering incentives for people to move there, so tax, visa, the talent acquisition. How do you think about that? What has to be done in order for Europe to keep growing?
So look, I mean, I think governments have to play a role, and ideally a positive role, in fueling the ecosystems. And broadly, it comes down to capital, talent, and ability, and environment to help foster that talent and capital to come together and create amazing things. So I think the UK has just done something. The UK launched the British Business Bank, which is the UK's investment bank, which kind of mirrors initiatives like BPI in France and EIF and others in Germany, because ultimately everyone knows that venture capital is the key source of innovation finance. So in the US, 70% of the market cap of the Fortune 500 is venture financed. Mm-hmm. We will see the same here. And there are a couple of things. On the one hand, there's kind of debt and loans and et cetera to get startups going, or equity. And then the big kind of opportunity is around scale up and putting the right amount of capital and making sure talent is fluid. And I think if you're moving into this next wave, which is more deep tech orientated, I think we're all aware that the gestation curve of R&D to product is longer. And therefore, if you want to play in very disruptive areas which require some of the best scientists, engineers, etc., to come together, then you have to play a slightly longer game. And that longer game is not traditionally where venture capitalists play, because venture capitalists generally take kind of product market risk when a product is ready. And if you look at what's happened, historically the governments used to fund it through military applications around the world. But the world has turned upside down in the last 20 years because the biggest R&D budgets in the world sit at Google, Amazon, Facebook, etc. So Tencent, Baidu. So most of the innovation in the world in terms of hard R&D, the R&D budgets of those gorillas are bigger than the UK and bigger than most countries. And therefore, all of that kind of long moon, people might call moonshot, but essential for the next wave disruption is happening elsewhere. And if we don't intervene as governments to work with the industry, to work with venture and growth capital, we will not finance any of this. And that will not be part of Europe at all. So I think there's a massive strategic challenge for Europe, which is we're only just starting, but we need to be much bolder and work through this next wave, or the next big wave innovations, which are heavy R&D, will not happen here.
Yeah. Okay. Yeah, that's great. So Ibrahim, maybe we can turn it back to you now to talk a little bit about, so you've launched, you have money here, you're ready to go, you're looking at investing across Europe. How do you even begin to stay? How do you start that? What is your strategy? Do you pick a few key cities? Do you have a team just out there meeting founders? Like, how do you make sure you're staying on top of the trends and meeting the best people?
So first thing I do is I call Dharmash. And it's true, actually, every time I come here, we call him. I'd like to start calling Christian, Julia. So, we meet our partners. I don't like it. We don't like it when Dharmash just sends an email or a call and says, "Hey, I have a company for you. You should look at." I just think that's lazy on our behalf. Not because what he's sending is not interesting, but that's because we are not really putting the effort to understand what he's looking at, how he's thinking about the world, what are the interesting companies. We want to be thesis-driven, which means that as we interact, we can also share interesting information with our partners. They share interesting insights. And ultimately, we want to be able to develop these theses. In the US, we have a very deep thesis on healthcare and life sciences, supply chain and logistics, financial services and fintech, the automation of enterprise, the future of analytics. You just have to sort of meet a lot of founders and go very deep. And that's what we plan to do in Europe. We meet with the SoftBank Vision Fund partners, we interact with them, we come to events like this, we meet founders. It's constantly triangulating all sorts of insights, and you just have to get on the road. I was in Berlin last week, I'm going to Paris on Friday, we're meeting 4 funds in Paris so we can try to understand how they're thinking about the world. It's just a lot more proactive. And it's not just meeting founders when they're raising or companies when they're raising. It's always ongoing. we are least interested when a company calls and says, we're raising and you have like 6.5 days to close. That's just not interesting for us, because we need to get to know you and you need to get to know us. It's a long-term marriage. I mean, you have to decide as a founder whether you want Mubadala on the table with you over the next 10 years. We bring a lot of great stuff. We also bring some not so great stuff that you should be able to understand, and vice versa. And I think that's sort of the different approach that we're taking. We're not just sort of a co-investor that the great VCs call when they need more money. It's a different approach to, and my view, by the way, you're going to see a lot more sovereign wealth funds do this in the next 3 to 5 years. You're going to see a lot of large institutional investors do this.
And when you say see a lot more sovereign wealth funds do this, you mean start their own internal venture teams?
Yeah, I think it just become a lot more direct and active and engaged in the communities where great technology companies are emerging from. I think you will see that. You're going to see a lot more Chinese capital really start becoming much more local than we've seen in the past, and vice versa. I think the great VCs of Europe have to, I believe, will want to partner with investment firms like ourselves. Yes, we might compete sometimes, but there's a lot of opportunities to partner. And I think that's really what's really valuable for the founders that have the insight and the foresight to think long term with us.
Okay, well, I think on that we're out of time, but so long-term partnerships and some optimism, some pessimism, magic mushrooms. I know we've learned a lot today. So thank you for your time to all the panelists, and thanks for listening, everybody.
Thank you.